Welcome back to the Dividend Diplomats YouTube channel, everyone. You got Lanny, Big L, Bert the Herd here, the Dividend Diplomats. We can't wait to talk to you about how dividend growth investing can help you beat inflation in 2021.
It's true. It's damn true. But before we do, smash that subscribe button. Give Bert the Herd and Lanny a thumbs up. We are over 8,100 plus subscribers on the road to WrestleMania or 10,000 subscribers, and we can't wait to hit that mark. So let us get there. Let's go, baby.
And thank you, everyone, for your support along the way. We really appreciate it.
As Bert said, we're diving into a bunch of stocks and really talking about how investing and dividend growth investing helps you beat inflation. And Bert, why is inflation such a big topic right now?
Because it was recently released that inflation hit 4.2%. Nearly double the historical average of what you typically see from inflation, which has been around 2% recently. And why is this such a big deal? Why do we care so much about inflation? Well, our ultimate goal with dividend investing and growing our passive income is to live off of this passive income and dividend income stream. We want our income to cover our costs, and that will help us achieve financial freedom. So what happens with inflation, Lanny?
It eats at your purchasing power. So you might be earning 10 bucks. And then milk goes from $5 a gallon to $10 a gallon. So you buy 1 gallon of milk. But your dividend increase is only grows by 1%. But yet the price of milk is going up by a higher, faster rate than that. So your earning power and purchasing power becomes less and less, and you're buying less goods for what you currently make.
Exactly, and that's why this is going to be key in what we're going to show you. And we're going to show you some stocks, some dividend growth stocks that will help you achieve a higher dividend growth rate than that 4.2% growth rate for inflation.
Gotta beat inflation. I mean, and there's a lot of dividend investing out there, a lot of dividend growth stocks that maybe the growth rate doesn't quite hit the inflation mark, but we are here to bring you at least 5 dividend growth stocks, and in fact more than 5, that crush that 4.2% inflation rate that the Treasury just released last week.
Because remember, our goal is to see your passive income stream grow, and that's why we want to see these strong dividend growth rates that exceed that 4.2% inflation rate.
Like Arnold, when it burns, it grows.
That's it, exactly, Lanny. Exactly. So we're not going to go through our full stock screener here. We're not going to talk about valuation in this video. Valuation is important, but we really want to focus on that dividend growth
We might not even talk.
We're going to talk. We're not going to just give you some pictures and some charts.
Hey, Bert, you take it easy, man. You take it easy, all right?
Exactly. So I think talking about one of these stocks, let's dive right into one of our top 5 foundation stocks for your portfolio. This company shocked the world when they announced a 10% dividend increase in April. Lanny, which company is this?
Well, it wasn't IBM. But it's Procter & Gamble, ticker symbol PG. They blew expectations out of the water because historically, what is that usual 5-year growth rate? That
usual 5-year growth rate is 4.07%, which you may ask yourself, that doesn't exceed 4.2%. But remember, before this year, inflation was around 2%. So not only was Procter & Gamble crushing inflation in 2021, but over time, over the last 5 years, they have consistently grown their dividend at a higher rate than inflation.
So their 10% dividend growth that they came out with in April more than doubled what any of our expectations were, and probably what a lot of your expectations were with Procter & Gamble stock.
Yeah, and what I like about Procter & Gamble is you buy their goods in good times and bad. You're going to be buying toothpaste,
Crest
cleaners.
Toothpaste, just used that this morning, and their mouthwash.
Yeah, so their products are staying, they're a dividend king.
Are you a Gillette guy?
I use some Dollar Shave Club razors still. Still doing that.
Doesn't even support the stock.
Hey, I got to support my bottom line first, stock second.
I'm about to choke slam this guy over here.
Hey, it happens, but they're again
through the table.
Yeah. So they crushed it as a result of the pandemic. They rewarded shareholders, and their dividend continues to grow at a rate better than inflation. Wow. Dividend stock number 2 is also found in grocery stores and can be found in a lot of people's houses here, except we're moving into the kitchen for this one.
We are. We're moving into the fridge, maybe your pantry with chips. We're talking Pepsi, ticker symbol PEP. They good old Pep. Pepsi's about to put a pep in your step over here because their 5-year growth rate on average is almost 8%, Bert.
Yeah, and that is fantastic. And what's kind of shocking here is Pepsi's increase in 2021 was actually below their 5-year average. It was 5.1%.
That's true.
But that's still greater than the inflation mark that we're talking through. What I like about Pepsi is their dividend yield is near 3%, and with that 5-year average growth rate of nearly 8%, it's a great combination and a great factor, and that's why I'm happy to own Pepsi in my portfolio.
And they're about to be a dividend king
That's
because
right.
they've been increasing their dividend for over 49 years, getting to that illustrious 50-year mark.
Fantastic point, Lanny. So yeah, another great company that will help you beat inflation this year.
And here's another company, the third dividend growth stock we're here to talk about, a stock that you probably buy all the time. I know there's a lot of investors out here that really were pumping up this stock. And Bert, you got to mention this name.
Do I?
Yeah.
All right, Apple, ticker symbol AAPL. They're not in my portfolio. They're not in Lanny's portfolio. They don't have the highest dividend yield, but what's important is how they've continued to grow their dividend over the last decade as they went from full tech company to now tech plus dividend growth stock.
They are. I mean, their 5-year average is 9.45%, more than 2 times the recent inflation rate that came out, for the month of April and May. And the recent dividend growth rate in 2021 alone was 7.3%.
Fantastic.
I love that stock.
I do too, and you're right. A lot of people do because their market cap is their market cap over $1 trillion?
They're a beast in the dividend stock and just stock investing industry right now. The yield at only 0.69% scares a lot of people away, but again, they're a growth company.
And remember, we're really focusing on growing your passive income stream in this one. So it's nice to see, even though it's a lower dividend yield, they have that growth rate that's going to help that dividend income you get from Apple outpace that inflation rate.
If you own Apple stock, give it a like really quick because we want to see how many people are out there.
Please do. Number 4, I have to do this one. Johnson & Johnson, the company I have been buying weekly now following Lanny's Vanguard strategy. Their dividend growth this year was 5%, still beating that inflation rate, although it was just a hair below their 6% 5-year dividend growth rate.
Yeah, their 5-year growth rate's 6%. So again, both above that rate of inflation right now. And again, a lot of products in your house that you're going to find from J&J. Going into the next dividend stock, Costco, ticker symbol COST, COCST. And they've just been blazing trails in the dividend growth investing world. And why is that, Bert?
Yeah, they have this unique thing where they crush it with growing their annual dividend. But then on top of that, they also sprinkle in these massive special dividends.
Huge.
So last month, if you were an investor, you received a standard increase in your dividend, massive, huge, 12.8% increase from your annual dividend.
That's nothing to mess with.
No, but also then don't forget about that $10 per share special dividend you also received in November.
Billions of cash flying out the door, but guess what? That payout ratio is low, and they're going to keep bringing it.
Yeah, and their 5-year average growth rate was 12% for their dividend.
Talk about a pandemic-proof stock, one that has really benefited, sadly, not only consumers, but shareholders.
Exactly, and their yield's not the highest. It's around 0.8%, similar to Apple, but look at this growth rate. This is going to help make sure that your dividend income you receive from Costco crushes inflation.
You shop at Costco, don't you?
We do, yeah. We'll get a lot of our regular household supplies there, and it's packed.
Go thank Bert for that dividend
Yeah, I mean,
increase.
it's packed. It really is. Every cart's full. People are spending hundreds
shoulder
of
to shoulder,
dollars.
sweat, all that. Ugh.
Yeah, I'm waiting for those full samples to come back. Maybe we're getting them soon, but that's a different story.
Yeah, Bert loves eating those little hot dogs and the pretzel.
Hey, I'll never complain about that.
Yeah.
Last but not least, Lanny, I think you should take company number 6.
All right, let's go. T. Rowe Price, ticker symbol TROW, and I think Bert mentioned that because one of my first ever investments back in 2009 was with T. Rowe Price because I had no idea about investing. Still own that as, for nostalgia reasons. But T. Rowe Price, again, one of the largest asset management firms, and their 5-year dividend growth rate on average is 13.2%. They're a dividend aristocrat, increasing the dividend for over 25 plus years, crushing inflation. And Bert, what was that increase earlier this year?
It was just a small 20% dividend increase.
Huge.
Massive. So they crushed it. Well, no kidding, because look at what the stock market's been doing. Funds are flowing into T. Rowe Price.
They stone cold stunned everybody with a 20%, growth rate right there. Again, with the appreciation in the stock market, T. Rowe Price has been doing very well when you think about how they derive revenue. Asset management fees is usually based off of, fund and fund performance. So T. Rowe Price just really choke slamming the competition right there.
Exactly. So thank you, Lanny. These were 6 companies that had dividend growth in 2021 that outpaced this new 4.2% inflation rate. Remember, it's always important to make sure your purchasing power is increasing. So keep an eye on dividend growth as we go through 2021.
That was 6 dividend growth stocks. Please let us know in the comments how many out of the 6 that you own that consistently beats that inflation, that you see that increase in growth outpacing the increase in good prices. Let us know other stocks that you feel like are really inflation protected dividend stocks.
Yeah, because these are not the only 6 companies out there, but we picked 6 of our favorites.
Again, if you haven't already, please subscribe to our channel. Give this video a thumbs up. This was Bert and Lanny from the Dividend Diplomats.
Over and out.